Hello, everyone. Good afternoon. Thank you so much for joining us here at the Harvard University Employees Credit Union. Welcome to Wintersession 2024. Today, we're going to be talking about navigating future benefits. It's a topic that a lot of people, I feel like, don't quite feel like they have a good grasp on until they do need to know it. And then what are you going to do? So today we're happy to talk a little bit more about it. My name is Ty Robinson, and I am a community engagement specialist here at the Harvard University Employees Credit Union, or HUECU. And I'm here today with Elizabeth Rich, who's going to be our expert on today's topic. But before we get started, we're going to go over a couple housekeeping things and talk a little bit about the credit union. So first of all, everybody is going to be automatically muted for today's presentation. I'm sure you all know about how Zoom works at this point. It's a pretty impactful part of all of our lives. But for today's webinar, we're going to all be muted so you can have your lunch, you can take it easy, kick back, enjoy the presentation. Another thing is that, Elizabeth, do you mind just hopping over to the next slide there if you get a
Oh,
chance?
I'm
That's
sorry.
okay. Don't worry about it. Just want to make sure everything's working as intended. Very good. Okay, so if you have any live questions during today's thing, please use the Q&A feature if you can instead of the chat. This is going to help us just kind of like collect the questions a little bit more easily, address them a little bit more easily. And I do just want to also let you know that today's presentation is being recorded here at HUECU. All of our presentations are recorded and we put them up for free on our YouTube page, which is my HUECU at YouTube. So please feel free to rewatch it or take a look at any of our other financial topics. There's all sorts of great information on there. So a little bit about the credit union. We here at HUECU are a credit union, which means we're different from a bank because we are a not-for-profit organization. This means that we can give the profits that we make back to our members in the forms of fewer fees, better interest rates on certain types of accounts, things like that. We have a direct hand in our community, as well as making sure that we do a lot of giving back, charitable donations, volunteer events, things like that. And so we have a lot of ways that we give back to the community and to our members. So if you're not a member yet, I definitely recommend you take a look and learn and see what you can do. If we go to the next slide here, we can see that any and all students at Harvard are actually eligible to join the HUECU family. You can open an account with us. We have all sorts of different products that are designed for students to make sure that you can build your banking profile, build your financial wellness. We have a lot of fee-free options, as well as even some options to refund ATM fees and stuff like that if you have to use a foreign ATM. So great options there. And two things that people might not always know is that once you are a member with us from being a student, you are a member for life. So even if you decide to leave for a while, but you want to come back into the area, or you move away or move back, you can always have accounts with us, as well as having accounts with us even if you live somewhere else. And this membership benefit also extends to your family as well. So as long as you ever start a membership with us, your family will always get that benefit as well. So definitely something to take a look into. We have all sorts of great things on the website, which you can take a look at your own leisure. But for now, let me introduce Elizabeth here. So Elizabeth serves as the Assistant Director of Benefits Outreach and Educational Programming here at Harvard University. She's been with Harvard for 18 years, and before that worked for 6 years in the benefits office at Tufts University. So she knows what she's talking about. She has also received her master's degree in History of Art and Architecture from Harvard University's Extension School, and we are very happy to welcome her here to Wintersession as our expert in benefits. So Elizabeth, take it away.
Thank you. Thank you very much, Ty, and welcome to the hearty group of students who are here on this maybe snow day, wherever you are. This is, I think, the second or third time that I've had the pleasure of being invited to do this. It's really exciting to talk to students because at Harvard, we have 19,000 benefits eligible employees and about 5,000 retirees. So that's the population that we are normally dealing with in the benefits office. And Ty mentioned my 18 years, and I happen to be spending my anniversary today. 18 years ago today, January 16th, I was hired. And so that's also an exciting day for a couple reasons. And we thought what we'll do is we're going to go through this presentation. And please, I want to state up front that this is sort of employer X. These are not, this isn't a Harvard new employee orientation benefit presentation. However, I think it's actually quite helpful that it isn't, because in this presentation from, say, another employer, we're going to be able to see some of the other ways employers offer benefits where Harvard might offer them a little differently. You'll find going out in the world that each employer may have a slightly different way of doing things. So we're going to try and cover the important things like deadlines and savings and address changes and checking out your paycheck and things that are more, big picture, but also we're going to be saving some time for questions. So if you don't mind, please put them in the chat and we will answer them at the end. We're going to save some time to answer questions. So we'll just start off by saying, welcome to your future dream employer. It may be Harvard University, it may be some other place, but we're going to talk about what you need to know about your benefits to make them work for you. So we have actually, and I believe a link is going to be shared with you, the Harvard page. We have an intranet called hr.harvard.edu. And the world of benefits, and this is one example of the way a place may call benefits, falls under, in Harvard's terms, total rewards. So if you look under total rewards, you're going to see medical, dental, life insurance, retirement plans. But oftentimes people don't think about that as part of their salary. It's just, oh, I've got to get my medical insurance. I've got to save for my retirement. But actually, when you are going to, apply for a job and you get an offer and you see your salary, that is going to be your salary. You'll get a paycheck. It'll be based on that annual salary. But in your paycheck, and we're going to get to that a little bit later, you'll see actually the deductions for your benefits that you pay, but also your employer pays towards your benefits. And that's called fringe benefits. The percentage that a department is charged for offering a job to someone and paying for a portion of their medical insurance, dental insurance, life insurance. So when you hear the word fringe benefits, it's really talking about the percentage that an employer is paying towards the cost of your benefits on top of the salary you receive. And so that's just something to keep in mind when you're thinking of your total salary. And here we are at a paycheck. Let's see if I can make this a little bigger. I'm not sure. Oh, I can. Can you see that? Did that change? Yes. Okay, great.
Looks good.
All right. So this is a pretend paycheck from Mass Eye and Ear Infirmary, also a Massachusetts employer. And here is at the top, we were just talking about your compensation. Here's where you'll see your hours and your earnings. That's your actual salary. When you take time off, right? When you take vacation time or sick time, that is broken down in here as well. So sometimes you're going to just see a straight line. You've worked the whole week, regular hours, but other times if you've got some overtime, depending on your job, or sick time or vacation time, that gets all broken out and listed here as well. And then we might realize, of course, that we pay taxes. So what's going to come out of your pay, your salary, your federal and state taxes, depending on where you live. Some states don't have state taxes. Massachusetts does. And also a percentage towards, it's a Medicare cost, a fee, a tax, if you will, because ultimately, we're jumping way ahead here because you're young and still in college. But when you turn 65 and you're eligible for Medicare, that's a health insurance benefit that the federal government is providing to you. And so you're paying a 7.65% tax for that benefit. So that's taxes, but we're here to talk about benefits, and I am not a tax expert. So here we have, and this is really helpful, we have a list of benefits that you might be signing up for. Partners Select, that would be medical insurance. Dental, vision, a traditional TSA, which is a tax savings account. You're putting money away for your own retirement. And a dependent care account could mean down the road, you're married, you have children, and you want to put money aside for daycare. So that when you see the word before tax, and this is where I have to give an example. Let's say that your weekly salary is $1,000 a week. Okay, gross, meaning before any taxes or anything's taken out. You're going to be taxed on $1,000. But if your employer offers pre-tax or before tax benefits, whatever you sign up for and pay is going to lower your taxable income by this amount. So instead of being taxed on $1,000 a week, you'd be taxed on, let's say, about $900 a week. So it lowers your taxable income. After tax, in this case, supplemental would be life insurance, I believe. That just simply, it does not lower your taxable income. So you have the before tax and the after tax, and your net pay. And the thing I would say about a paycheck, because this is again a generic paycheck, is you should check it. I can't tell you how many people we talk to who, once they get into the groove of getting a job, they just don't check it. It just goes into their bank. And there are certain times a year, at least, you should check it. When you're a new hire, okay, and you've signed up for benefits, you want to check your paycheck to make sure the right amount is coming out. As you change over year to year, when it's a different tax year, there, you may decide you want to check it every week or every other week or every month. And that's another thing to know about employers. They might pay on different frequencies. Some employers may pay you weekly. Some employers may pay you every other week. And some employers may pay you monthly. And Harvard happens to have all three pay cycles. So our payroll team is busy. But so check your paycheck, make sure it matches what you expect, to see come out of it. And the other thing that you might be able to do with your employer, which I can say Harvard employees can do, we can go online and change our tax status. Meaning, let's say you claimed when you first started single with 0 withholdings and you get married. You could get online and change your tax holding to married. So there are things as you make your way through a job that you'll learn, and there are ways to do things online in most places, maybe not every place. So that's where your payroll or benefits office can come in handy if you have questions about how to make changes. Okay, so let's see. I'm going to, oops, sorry about that. Take a sip of water. So we just looked at a paycheck that listed some benefits that employee X signed up for and is being charged for. Now, here we're looking at a menu that you probably will look at when you're a new employee. And I think somebody had asked a question before the meeting, can you get a higher salary if you decline benefits? And the answer is possibly. Harvard is not an employer that does that. So if you come to work at Harvard, and let's say you are on your spouse's benefits somewhere else, and you decline because you don't need Harvard Medical or Harvard Dental or Harvard Vision, the amount of money that you might be saving the university is not going to be added on to your pay. However, we get those questions quite a bit because we do have employees who have spouses or partners where that does happen. And so this is another example of it depends on the employer. And it's a good question to ask them, perhaps when you're interviewing, or to look online to see if it's out there already. But so it depends. And but the menu of options typically, at least nowadays, are pretty common. Medical insurance, dental insurance, vision. These three benefits you might see fall under health plans. Okay. Income protection, those tend to be your insurance benefits. Life insurance, short-term disability, long-term disability, and accidental death and dismemberment. These are the most common kind of insurance products offered. And again, you on the call here might be thinking, oh gosh, that's not anything I need to be thinking about right now. But when you do start a job, for example, at Harvard, we offer free basic life insurance. So when you start, even if you didn't want the additional, you're going to get half of your salary of life insurance. And it's not a fun topic to talk about because sadly, I mean, it really, the benefit is if the employee dies, then the value of that life insurance goes to whoever you've named as a beneficiary. And that, I can't stress that enough as well. You want to always have updated beneficiaries. We've had people name a boyfriend or a girlfriend, right? as a young employee and forget about, especially about life insurance. And then 30 years, 40 years, 50 years later, we're going through paperwork and they never updated it. And in that case, with life insurance, it actually, even if they're married, it has to go to the named beneficiary. So that's a dramatic, way to say, just always update your beneficiaries as you go through life's different chapters. So when I say free basic life insurance, Harvard pays for that, okay? But if you looked at your salary and said, okay, I'm starting out at $50,000 and 25,000 is not enough to cover my debt or to cover whatever a mortgage, I need more life insurance if something were to happen to me. That's where optional life insurance comes in, but sometimes it's called supplemental life insurance. And an employer can offer you at a large discount rate. So it is cheaper. I can at least say for Harvard, it's cheaper for you to do that here than go outside to a life insurance company. And typically, the way you elect it is it's tied to your salary. Would you like 1 times your salary of optional? That would be 50,000 plus your 25 half for the basic life. So now you have 75,000 worth of life insurance. Or would you like 2 times your salary? And there's usually a cap of how many times salary you can elect, and even a dollar figure cap. So Harvard has 6 times salary. Someone can elect up to 6 times salary, up to a cap. So that's life insurance. And when you leave, let's say you work at Harvard for 5 years, and you've selected the 3 times your optional life insurance. You are ready to move on to a new employer. That benefit simply just ends. So you would have the option to convert it to your own plan with the insurance company. But another thing to think about as you're starting a job is we have documents, at least out on our site, which you can find with the link that they put in the chat, called What Happens When. What happens when you have a baby? What happens when you get married? What happens when you get divorced? What happens when your spouse loses a job or gets a job? And it tells you, or what happens when you leave. So you understand, if I'm enrolled in medical insurance as a new employee, I've just started out, oh, and I'm going to get a job somewhere else in 2 years. Gosh, what happens to my medical insurance? That there's a continuation that must be offered if you're enrolled. But for your employer, find out what the rules are for electing benefits, because typically there's a 30-day timeline, and for what happens if you leave. And so we have the other income protection is short-term disability. That's another benefit that's typically automatically provided with employer, but other employers might charge for it. But it's essentially a 6-month short-term disability. People use short-term disability for maternity leave, or if you have to be out you hurt your ankle and you need to be out for an extended period of time, then more sick time you have. And I'll try to point out that some of the topics we're talking about here, yes, they fall under the world of benefits because you're electing them and you pay for them. But in terms of the rules and who you talk to about if you have to go out for an extended period of time, that's between you typically and your HR person. So you want to also find out who is your human resources point of contact or a leave administrator. When you have these questions about short-term disability or long-term disability. And again, these benefits, when you leave a place, typically they don't come with you, but again, it could vary. So you want to make sure you find out who are the people you need to know and talk to in the benefits office and in the HR world when you take a new job, so that you can learn the specifics. Excuse me just a minute. Okay, and Ty, I'll also just say, as you're looking at questions, if you see anything that's super relevant and urgent, or feel free to shout it out.
Will do.
Okay. All right, now I'm gonna try and tie it back to the paycheck, where we had the before tax and the after tax and the benefits that can lower your taxable income. This category right here, health plans, those are the ones that can typically be before tax. The income protection are after tax. The flexible spending accounts healthcare account, dependent care account, or back to pre-tax. So another way to lower your taxable income. But also, lesson learned, we had an eager employee, new employee here one time, who just, read everything, was excited to start, and really just signed up for everything. They just wanted to sign up for all the benefits, but they didn't need them, and so just also keep in mind, you don't have to enroll in everything. So I say that because the healthcare flexible spending account, you might hear someone talking about it like, wow, that's great, I can lower my taxable income. And it is good, but you want to make sure that you need it, because it's essentially for healthcare expenses that aren't covered by your medical, dental, and vision. Okay. And you could Google eligible healthcare FSA expenses. It's out there because it's nationwide federal, rules apply to it. So you could see, you go to the pharmacy, certain things are eligible, and you would get, like, typically when you enroll in a healthcare account, you get a debit card, but it's not free money. You are the one saying, oh, let me add up how many expenses I'll have. You have to predict how much you're going to spend. So there's nothing wrong with, as a new employee, taking a year and watching to see what you spend, and then signing up for an amount during the next open enrollment, which we'll talk about life events as well. And then dependent care is not a healthcare account for your dependents, which is what a lot of people mistake it for. It's for care for children under the age of 13 that are in daycare. That's a simple way of saying it. It doesn't include some after school programs and so forth. But again, it's another way to lower your taxable income for things that you would be paying out of pocket for anyway. So it's not someone gifting you money. It's you signing up. The money's coming out of your paycheck, but on a pre-tax basis. So really what you're doing is lowering your taxable income, but still paying what you were going to pay. Oops, sorry. To move. Okay, now we are in another category, retirement. And this is a great example of how certain employers might have a traditional 401k and a Roth 401k. At Harvard, we have 403bs. And what are these numbers and letters? They are sections of the IRS code that dictate the rules of the plan. So you will also hear of a 401a. But you might go work for an employer that says, hey, if you put X percentage in, we'll match it. So that's a matching structure, which you do typically find under a 401k. A Roth is an after-tax vehicle. So we were talking about before tax and after tax. And you would absolutely want to take advantage of financial education at your employer to learn more about if a Roth option is right for you, or if the traditional, and it's important to know what they mean by traditional, it means pre-tax. So you have decided that you can save, and I want to stress, even if you can save, $10 a paycheck, it is so going to be worth it when you are older to have that money. Not only because of compounding interest that happens over time, but also because you've started yourself in a good habit. So you start out early by knowing, okay, let me just put a little away. And then when you get a raise or maybe pay off some other bill, you might have an extra $5 you can add to it. It really does add up and will allow you to have more money available to you at a younger age when you're thinking about what you might want to do with a change in career or at the time of retirement. Now, Harvard, so I just mentioned, and I worked for Fidelity Investments for 2 years, and they were the kind of employer that had a match. I think, let's say they put in 2% for you because they're required to, but they'll put in more if I put in some. Okay. So what Harvard has is there isn't a matching structure actually, and you might think that's not good, but in fact, it's a more robust plan. They automatically, if you get a job at Harvard where you are eligible for benefits, you have the wait period. Once you meet that, the university is going to put in 5% of your salary if you're under 40, 10% of your salary if you're over 40, up to a certain wage limit, and then an additional 5%, and then there's a cap. And you don't have to put any in to get that. So that's a different kind of structure. But we also then offer a voluntary retirement plan called the tax deferred account, where you can put your own money away. The IRS has limits on all of these. So the limit for the TDA is like 26,000, which is a lot of money to be able to put away for most people, but it is the limit. Each year they set that limit. And so again, there's pre-tax or before tax, which is the traditional, and after tax, which is the Roth. And it also has an impact on which one you choose now and how they're taxed when you're ready to take it out. So that's why I stress going to find the financial education. Again, at Harvard, we have TIAA, that's the company we use. We partner with them on all sorts of financial education, and put together documents and things that are out there on our intranet, for people to learn. And we have recordings. So you're welcome to listen to those. It's out there on our public, hr.harvard.edu, just to get a little bit more in-depth understanding of the differences. And then we're into some of the fun stuff, the vacation and leave, which benefits office is not in charge of, but certainly we're employees as well. So we know vacation, which the PTO stands for paid time off. Sick, you could take a sick day, parental leave, personal days, and other kinds of leave. There's military leave, there's unpaid leave, there's sabbatical leave if you end up with a faculty position. And again, these things are typically discussed in a personnel manual. Okay, so on our hr.harvard.edu site, we have a section called, forms and documents, or union contracts and personnel manuals. That's where you're going to find who's eligible for what. How many years do you need to be here to get this amount of vacation time? And each month you accrue vacation time. Sometimes, there's a difference between union and non-union. So just to give you an overall general flavor of how places can offer different benefits, similar benefits, but in a different fashion. This is the typical menu of benefits. Now I want to just see. Yeah, okay, that will be the next two slides. Very good. Okay. I couldn't remember when open enrollment came up. So now we've just looked at a whole menu of benefits. Like you've started your job, you get an offer letter, you've accepted, and maybe your offer letter tells you you have only 30 days to elect your benefits. But in this particular employer, we're going to see something here that Harvard does a little differently. Okay, so here we have a policy. All eligible employees must maintain health insurance through their employer or another source. Okay, you may decline health insurance only if you have medical coverage through another source. Example, employer, spouse, or home country. If you do not select coverage, you will be automatically enrolled into medical insurance value, employee-only coverage, retroactive to your start date. And the benefits department conducts audits regularly. So this is how Mass Ioneer does their onboarding. That's another word that they call when someone's hired, onboarding. Okay, they actually have a default that if you don't choose, if you make no election, they're going to, just to be safe, automatically put you in a medical insurance plan. We do not have a default. We have when you're hired, you get not only an email with information, but we send something to your home address, which I want to talk about that in a moment. And it tells you have 30 days from the date that you were hired. Some people will say, is that the date of my offer letter? No, it's 30 days from the day that your offer letter says your first day is February 1st. So you have 30 days from February 1st to elect your benefits, and they go retroactive. So the types of questions we get could be, but I filled it out on February 20th and I didn't use any benefits for 20 days. Why am I being, why do I have to pay for that? Well, that's where we get into eligibility dates. and eligibility to enroll in benefits. The IRS will tell us there are life events. There are only certain times that someone, depending on the employer they work for, can elect benefits. And it's not any old time, and it's not tied to any random date. It has to be tied to your hire date, or if you're adding a baby, to the birth date, or if you're getting married, to the marriage date. So there are some rules around that, if you're wondering. And but again, these are questions you also want to ask your employer. They may say, oh, you know what? Yeah, we see that, we prorate it, or we'll give you a little money back. I mean, each place may do it differently. But you have, which I've started to say a few times, a limited number of days to make these elections, right? So you get your packet, you're eligible, we'll use that February 1st date. So you're hired, you're eligible February 1st. You have 30 days from February 1st to make your elections. Some places may still have paper form, but a lot of places probably have you elect them online through a self-service access. We use PeopleSoft. And the coverage would go back to your date of hire, and so would the premium charges. So when you look at your paycheck, let's say you're paid twice a month, okay? And you make your benefit elections on February 15th. You've already gotten one paycheck. Obviously, it's not going to have any of your benefits taken out of it. But then you get that second paycheck in February after you've made your benefit elections. You're going to see deductions that make up for that first pay period. And after that, then you should see just the regular monthly or biweekly deductions. One of the most common questions when someone is hired is, I have coverage somewhere else and it's not going to end for another month. Or I'm covered by my partner or spouse's plan. I don't need medical insurance right now. What do I do? Well, when you're making your elections, there is the button to elect and the button to waive. So if you don't need medical insurance or dental or vision on February 1st because you're covered elsewhere, then you're going to click waive, because you don't want to pay for two benefits. But then your next question might be, well, I only have it for another month, so how do I get on March 1st? Or what if my spouse loses it in 3 months? Can we both come back on together? And those are called qualified life events, which are sort of the last column here. Or let's say you miss that. You miss the qualifying life event. There's always annual open enrollment. So it is typically in the fall, at least here, and it looks like at Mass Ioneer, it's your one time a year where you can make elections without having to show proof of marriage or proof of birth or somebody lost coverage. You just go in and make your elections, and it becomes effective the following January 1st. So we have about a 10-day to 2-week window where people can go in and make their elections. I will say not all employers communicate the same way. We have heard that people who work for certain cities literally get one email saying, open enrollment is coming, here are the windows, go online and make your election. Versus we send out some postcards, we post things on hr.harvard.edu, we actually do mailings for people who don't necessarily use email. Some of our union employees who are, dining services, or we'll do both just to make sure they get it. And so you'll get your packet. Typically a month before, you should be educating yourself on what the benefits are, what's going to be for the next year. Are there any changes? Are they the same? Do I want to switch a health plan? That's another thing. You might pick a health plan as a new employee and decide, oh, you know what? I think I want to switch to this one. That's something you can do during open enrollment. And then you see listed here are the qualified life events. And I'll just say that typically the timeline to remember is 30 days. You have 30 days to make your election as a new hire, and typically 30 days with a life event. 30 days of, you got married on March 1st, you have 30 days from March 1st to provide a copy of the marriage certificate. So again, but you want to find these things out when you are a new employee. And it's overwhelming. It can be overwhelming when you take a new job. And I recommend that people just get a folder, whether it's a virtual folder or a real folder, and put some things that are important in there just so you can refer to them when you're ready, when you have the time, when your mind is ready to read it. And the other important question, which is also the same for Mass Ioneer, is I have a health insurance already. What do I do? And you see they use PeopleSoft. So now this is saying if you have it through another source, you opt out of medical insurance. Again, at Harvard, you would just click waive. Okay. But you could find an employer that has this. So it's good for you to see how another employer does it. What happens if I forget to enroll or to opt out? Well, you're going to be automatically enrolled. And I can just imagine that conversation. Someone could say, but I don't need it. I'm going to be double paying. But what they probably would say to you is at the next open enrollment, that's when you can opt out. And then who can you cover? So these are what we're calling dependents. Your spouse and eligible children up to the age of 26. Now at Harvard, so I can highlight a little different, we cover eligible children could mean biological children, adopted children, stepchildren, court awarded, court appointed situations. But in terms of partners, spouse, we cover same sex, opposite sex spouse, and domestic partners. So registered domestic partner means that you register with a city or a town, and it's a piece of paper. And let's say that you start out, so this is another common thing that happens, a question that comes up. Somebody starts working on February 1st. They've been living with their partner for 3 years. They never thought they needed to register, and they're like, okay, I'm gonna sign up my partner for my benefits on February 1st. But the question is, wait a minute, have you established a partnership? That's considered like the date of marriage, if you will, for purposes of proving the dependency. So you might have a little bit of a delay in when you can cover that partner, which would become effective when you establish it. So just something to keep in mind. As you see here, it looks like some employers don't offer that, but Harvard does. Okay. Excuse me a second. Ty, how are we doing for time?
That's a great question. We are running, I think, a little low on time. It's at
Yeah,
2:07 right now. We got about 23 minutes left, and we want
and
to
we
leave
want to
some time
save
for
like
questions if we
15 for
can.
questions.
Yeah, probably
That's
like 10 to 15. We don't have any live questions currently, but we did have
okay.
one or two more from the pre-registration to answer. So just a heads up, but thank you for checking in.
Yeah, sure, because this is where we can get in the weeds, and I don't think
Hmm.
we need to. Is
Yeah.
everyone getting a copy of this presentation?
Well, they will be available to watch on YouTube, but
Oh,
they
right,
won't
right,
get a
right, right.
copy of
Okay,
the like the presentation
the
itself
slides.
file.
All right,
Yeah.
so they'll be able to see it
Yeah.
because but this is also a great opportunity to say that there are different types of insurance plans. And we realize that certainly we hire a lot of employees from all over the world, and they will come to our office or call us and say, what is an HMO? I mean, I've come from the UK and I have national insurance, I don't quite know. So this is where you see the way that insurance is done here and in Massachusetts, different kinds of plans. An HMO where you have to stay in the network. You pay for 100% of out-of-network costs, hence needing to stay in the network. Point of service plan means that you do want to still stay in the network, but if you had to go out of the network, you'd get some coverage. Okay. Here you see primary care physician coordinates all the reimbursed care. A primary care physician is your doctor that you have established a relationship with. And by the way, if you've never done that, when you're starting your job, your benefits office there would be able to provide you, or should be able to provide you, with a link to the health plan to see who is available as a primary care physician. What languages do they speak? What specialties am I looking for them to have? So as you look at the different kinds of health plans, you want to look at cost, right? Your employer will show you how much they pay and how much you pay, and what kind of coverage you need and your family needs. Do you need to just everyone to stay in the network, or do you need a little bit more flexibility? And that's the difference between an HMO, a POS, a PPO. As you say, you pay more out of network, but nowhere near 100%. And then an EPO, we don't offer that. I can't really speak to it, but it's saying you pay for 100% of the out of network costs. So again, check with your employer. What are the different kinds of plans? Who are the health plans? And know that you can change your health plan during open enrollment, and you don't have to wait for a life event or open enrollment to change doctors. That's something you can do throughout the course of a year if you need to. And here we have an additional kind of benefit, again, offered by this employer, medical insurance plus and value. So it gives you a description of what you can expect and that you don't need. There's so many acronyms. If I could give any general advice, it's hopefully to ask for some help in understanding the acronyms. Everybody just throws out PCP, but that's your primary care physician. So again, your main doctor who you'd go to for an annual exam, who would say, oh, you need an eye exam, let me refer you to this doctor. Or you need a dermatologist, I'll refer you to this doctor. They're sort of your main point of care. And in some plans, you actually have to go through them all the time to get referrals in order for that next thing to be covered. And here, as you see in this plan, it's not required. You don't need referrals. My hunch is this plan might cost a little bit more. So when you're looking at the different kinds of plans and the rates, you decide what is important to you. Now, typically, prescription drug or pharmacy benefit comes along with enrollment in a medical plan. So you need to enroll in a medical plan, but you'll get a separate ID card for your prescription drug. Okay. And this is typical where they'll break down, if you want generic drugs, it's cheaper than the preferred, and then even cheaper than the non-preferred. And then there is the how many days supply. Sometimes it's cheaper to get things done in the mail, so you can get things mailed to you. You can get a 3-month supply. It's cheaper than getting 3 months at a pharmacy. So you'll want to do some comparing and what is important to you in terms of your medicine. I should also mention that with the medical insurance, you'll get an ID card. So you're going to be the proud owner of, you're going to need to either get a wallet or a card holder if you don't have it. You're going to get a new medical card, a prescription drug card, and if you enroll in dental, you'll get a dental plan card. And yes, typically they break down dental insurance in basic coverage, like you go and get cleanings, you need minor restorative, diagnostic like x-rays versus major dental. Okay, they typically break that, and that's called the super not fun dental, the major dental, where you might need, braces or a crown. But again, you would receive a description of what your dental plan will cover. And I will say, again, at Harvard, we have like a couple different health companies. You choose an HMO, a POS, so you have more choices to think about with the medical. With dental, it's really, do you want dental or not? And how many people do you want to cover? Same with the vision plan. We actually would provide a separate vision ID card, but here it's saying you won't get one. So again, it depends. And sometimes, just to say a little tip, the health insurance plan provides enough medical vision coverage. It typically provides 1 eye exam a year and discount eyeglasses. And if that's all you need, then maybe you don't need additional vision coverage. We talked about life insurance earlier, so this will allow us to sort of go a little bit faster here, that it can be up to 3, 4, 5 times salary. You also can get insurance for a spouse or a child. That's the same at Harvard. Accidental death and dismemberment, we don't offer, but that is if something happened to you and you weren't able to work, there's insurance for that. Which is similar to long-term disability, but this would be for a particular reason. Short-term disability, you have the option to purchase it. So again, Harvard, it doesn't cost you anything. It's automatic. It's 6 months. But here, so it's saying if you become disabled for any reason, short-term disability will continue 60% of your pay for 26 weeks. Once you're approved by the carrier, you'll start to receive your disability benefits after being disabled for 14 days. So, and this is saying your benefit is non-taxable or after tax, as we were talking about. Long-term disability is additional coverage that you would purchase. So it is for, God forbid, something were to happen to you, or if you had like an illness that was just long-term and you couldn't get back to doing your job, and the insurance company said, yes, we, and with they work with your doctor, we deem you, disabled, no longer to be able to do your job. By signing up for this benefit and yes, paying for it, should you ever need it, you would receive a percentage of your income, so that you would still have income. And typically here, it goes until age 65. It depends on what age you become disabled, how long it would last. But typically the longest is about till age 70. Flexible spending accounts we talked about, the pre-tax for your health care, out-of-pocket costs for your medical, dental, vision, things that aren't covered by those plans, and then dependent care for children under the age of 13. And you see the most you can sign up for is 5,000 pre-tax, and here 2,750 pre-tax. So if you were someone maxing out in both of these, you have just lowered your taxable income over the course of the year by $7,750, if it makes sense for you. And again, this is this other employer's retirement plan setup, traditional 401k. The contributions are before tax. It's going to reduce your taxable income, as we gave that example with $1,000. And the contributions and the earnings are taxed when you take it out, when you leave. Whereas the Roth contributions are after tax, so it's not going to lower your taxable income. But when you take the money out, you don't pay taxes on it. So each one has a good and a not so good option, but it depends which one is right for you. That's where you'd probably want to sit down and talk to a financial representative. And here's a reminder, submit your elections online. You have the 30 days. We send out emails like day 18. Hey, we haven't heard from you. So just remember 30 days. And I think we've now given ourselves a little bit of time for questions.
All right. Thank you so much, Elizabeth. Wow, a lot of information to cover there, but you got through it. Thank you so much for doing that.
Well, I do sorry, one other important thing I wanted to point
Of
about
course.
saving early and checking your paycheck is your address. I can't stress it enough. We deal with it all the time. You've gone for an interview, you've provided an address of where you are at that moment. That's the address that goes in the system. Maybe a few weeks goes by, you're already in the midst of planning a move, but you didn't update your address with your employer, your new employer. So that means your packet and everything is going to go to that old address. And you don't want to miss the opportunity to have the 30 days to elect your benefits. So when you're working with a recruiter or an HR person and you've given them one address on your resume, but you have another one in that window, please let them know. That's a tip.
Yeah, as somebody who's moved to probably 10 different apartments since I've lived in Boston, let me tell you, that's a great tip. So
Okay.
great. Okay, well, I have one other question here that was asked during the registration process, which is, in general, like, how can students start planning for future benefit conversations while they're still in college?
By attending something like this. So that was really,
Hmm.
and also I mentioned our intranet site is hr.harvard.edu. And actually, I'm going to stop sharing for a minute, okay?
Okay.
And then I'm going to share. Because another way to prepare, right,
Hmm.
is to gain knowledge. And so let me come back. Hold on one second. Okay, I'm going to share my screen with everyone again. And I'm going to show you, let's say that you were interested in working at Harvard or just wondering about their benefits. So where I'm going with this is, if there's the kind of employer, a hospital or a tech firm or anywhere you're interested in working, maybe get on the website of one of those places and read a little bit about their benefits. So as I mentioned, Harvard's benefits fall under total rewards. Okay. And here's this drop down. And if you come here in your spare time, and I'm sure you're busy, but and you go to health and welfare, that's where you'll learn about our medical, our dental, our vision, the flexible spending accounts. We have some videos that are kind of short and not too painful, and hopefully informative. Then we have retirement. So you see the employee funded, and the retirement programs are the employer funded, commuting and transportation, employee discount. So any one of you could take a look there. It's not behind a wall. And so maybe you could do that at some other employers as well. Ask your parents, your grandparents, your aunts, uncles, friends. I can't tell you how many stories I've heard from people saying, thank God for my manager, or thank God for my coworker who told me when I first started, I should sign up for this, or I should do this. Look out for those people. You might end up being one of those people to help out someone else, to remind them like, hey, just $10 a paycheck can really make a difference. But I think also what you might be thinking about is, when you're negotiating a salary, and wondering, okay, the salary is not what I wished it was, but maybe I could find out like what are the benefits, because if they have a great commuting benefit or a continuing education because I want to go back to school benefit, then actually maybe I could see taking a little bit less of a salary.
Great. Yeah, that's a really good answer. Thank you so much for that. Okay, well, it looks like that's all the questions we got. Thank you everyone so much for joining us today for winter session.
Wow.
We have a survey that I believe is going to be put in the chat now, which if you have a few minutes, please do feel free to fill out. We read each and every one of the answers on there because we want to make sure that we're improving and doing good stuff for all of our community and our members and our students. So thank you all, everyone, so much for coming today, and I hope you have a great rest of your snowy day.
Yeah, thanks everyone.
Thank you, Elizabeth.
Bye.
Bye-bye now.